Hi, I'm Kirk with Forex Strategy Secrets, and we're going to be talking today about how to get 1 year of experience in 30 days. That's a lot of experience in a short period of time. That could be a critical point to your success in the currency market. Now, many people they get 1 year experience, but then they repeat it 3 times, or 4 or 5 or 7 times. So it takes years and years and years, and they're the same place they were after 1 year. Or in some instances, after 3-4 months, that's where they level off. They don't get any more experience. They just keep on doing the same thing over and over again for month after month, year after year. So we want to share with you how to break that cycle. So what we're going to do right off is we're going to go to some charts and show you one way that you can get that experience quickly. Okay, so what I have here, this is what we call our jump start setup. Now this is free for everyone. So if you're here today, you have access to this, whether you realize it or not. So let us know if you do not have access to this jumpstart strategy, and we will bring it back to you. We'll show you how to get into it. So what I've done is I've drawn some vertical lines, and these are areas of interest to me based on this 1 hour chart. Now, so you notice that they hit right where the momentum of this indicator, we call it the MAO, its real name is moving average of oscillator, where it's crossing below the zero line or above the zero line. That's where we're looking to get heads up to take trades. So this first area right here, we're going to now go to the 15-minute chart. I'm going to put this, we call this the anchor. I'm going to put an anchor right there below that line so that when I go to the 15-minute chart, it'll take me right to that same point on the 15-minute chart. Now just look at this. It's not really taking off, but the momentum says heads up, be aware, something's happening. And it went sideways. So we go to a smaller time frame. Now look what happened. It said possibly go down a little bit, and it did go down 5 or 6 pips. Probably not enough that you'd maybe even take a trade at that point, but it did the retracement. Then right over here is where you would want to start taking a trade. When it broke this point right here, this swing low right in this area, and right here on this vertical line where the MAO crossed the zero line, that would be an entry spot. And for the purpose of this illustration, we're going to share with you where you might want to consider exiting. There are better places to exit than this, but when these moving averages, we call them hot lines, cross back the other direction, that area would be the area you might want to consider exiting. So from that point up to the potential place where you enter, there's about 19-20 pips. That's on a very small time frame, very small move. Okay, now let's go back to this 1 hour chart again. Now, this is where we're looking at a trade going in the opposite direction. Would you want to trade here? Well, there might be a few pips in there. Even at first glance, there might be a few pips. But why would you not want to trade there? Now, as we go through this, you'll see other indicators that will show you that this is not necessarily the best place to be going against the trend. So, just for an example, look right where this entered over here on the side. Look where it is currently. That's kind of a downtrend, and at that point, that's all we might have if that's all you're using as jump start. We go back and look at the big picture, but that's just for what we're seeing. Let's keep it simple and see that, hey, that's kind of a downtrend. Do we want to trade this counter trend trade? Well, let's go look at it. Did the criteria meet the same criteria that we talked about before, where the MAO crossed the zero line? So probably towards the end of this bar and the beginning of the next bar, it went long. Yes, if you'd taken that trade, you might have been 10 pips, but you may not have taken it until it passed above the swing high right here. And so it would have been a little profitable trade, or you rode it and it came back close to where you broke even, then went up a little bit. So this, and no matter how you look at it, would be a hard place to trade. And you should be able to, when we get through here, identify that that's going to be a tough place to make a trade anyway. So now let's go look at the 1 hour a little bit further along. Now you notice it came down below, went back above, came down below. So let's look to see what happened at that point and see whether we would taking trades over here. This said, hey, heads up, markets, the momentum's kind of headed down. Let's look at this 15-minute chart. Well, right here, it did pass below, and if we'd gotten out, well, there's 5 or 7 pips. You may not have been able to respond based on the spread of the currency pair you're trading. So let's say you did get into that trade, and let's say that you had put your stop loss right here at this point. So you give a little bit of room to move. Well, look what happened. You would have been taken out on that trade. You would have lost, about 10 pips on that trade. Should that bother you? No, don't worry about it. You did exactly what you're supposed to do. That was a successful trade because you followed some rules, some patterns of trading. Let the market continue a little bit longer. Now, this vertical line we know is where the 1 hour said, yes, it's crossing below the 0 line again. So let's move this line over to right here. So I'm going to move this line up. Okay, now right here, this said it's going below the 0 line. The larger time frame said that was the correct move that it thought that it was going. As we look back over that 1 hour, yes, that said that there was kind of a downtrend. So this is just a continuation of a downtrend. So if you'd had something to bring it to your attention or you'd been watching, right there was a move. And right here is a potential exit. Now there are other exits, but this is just the one we're using for this illustration. That's 45 pip range, 40, 45 pips. Well, we lost 10 over here, so are we positive? Yes, we're still growing our account. Now let's take it a step further. We found that if people will follow this strategy, and there's a little piece that we'll share with you at the end where you can find an assignment that you can do, and if you follow through with it, everyone that has, they find that they actually make more pips than they lose by using this very simple strategy that we're sharing with you. So let's go to this part. Is what we call Launchpad. It is the first portion, or the Launchpad portion of our trading course. It's the first part of our nth degree trading course. We just call it Launchpad because it builds a foundation to take off. Now we're going to put these vertical lines in the same place we put the vertical lines the last time. This is the same indicator. We haven't changed it. And right here, and right there, and right there. So the same 4 lines we had before. Now, the market moves in impulsive moves and corrective moves. And visually we can see impulse, correction, impulse, correction, impulse. It's forming a correction at this point. So would we be trading here? No, we'd probably be out waiting for the next setup before we take our trade. So let's go down now to the 15-minute chart. I'm going to put it right here on this vertical line. This is the 1 hour. Now we're going to the 15-minute just like we did before. Well, you may or may not have taken this based on what you see, but if you had, you would have broken even. If you stayed in, you've been okay. It went 15, maybe 20 pips against you. But where do we see the entry? We see the entry right here. We're crossed below the 0 line on the Mayo. There's an impulsive move right there. Now let me just show you one little step further. What if we move back up to the 30-minute chart? This is the area that we're looking at on that 30-minute chart. It smooths out some of this area down here. So maybe you'd say, well, maybe I'm going to stay in a little bit longer and taking out 40, 50 pips on that one. Or had we gone to the 1 hour, now we're trading between these 2 lines right now. This smoothed out all that area, and so you could have added a few more pips to the move depending on how you want to do your exit. Notice what these moving averages or the hot lines did. Okay, so that was an impulsive move. That's where you want to be trading. When you recognize this as a corrective move, just sit on the sideline for those and wait for the next impulsive move. And we go through all kinds of material on that to show you. So let's just see what this looks like quickly on the 15-minute chart. Well, yes, but it gets choppy. And so you get up here, maybe you took a few pips out of that. Maybe you don't want to trade that anymore because you recognize maybe it's a corrective move. Now let's look at the last two. Now this is the place that we lost the 10 pips and we made the over 50 pips. Right here. Say we'd gotten in just as that cross below. Well, here's some exit signals. We have two exit signals now. One when the color changed on this indicator and the hot lines crossed. So this we may not have lost the 10 pips. We might have made 5 pips or at least broken even at the worst case scenario. Now we can see that we're going to move this line over again to right here. So there's a couple of signals, and this is the one we were using before. It's when it passed below this swing low area, and of course it looks very similar to the other one, and you get a similar amount of pips. But this is easier to let you know what's taking place. Let's take it a step further. We've looked at jump start. We call it jump start just because that kind of gets you going, and we let everyone take a look at that to see if they like the way we trade. Then we're in Launchpad. This is the beginning part of our trading course. Now we're going to go to our nth degree course. Now we've left on the same indicators we had before. We've just added some more indicators. So let's go back to the 1 hour. Let's mark quickly this section right here. So we're marking the same section on this male, and we put another mark there. Okay, this is the same scenario setup that we were looking at before. Let's move this anchor over. So when we go back to the 15-minute chart to see, is there something that's going to tell us that we should start trading here or wait until something else forms to start trading? You have some other indicators here. These are just moving averages, these dotted lines, but they're kind of in a tangle right here. So you may or may not want to start trading there. These indicators are not strong, saying that's a direction you would want to be trading. Right here is a possible heads up, or you wait until the market moves below here. This would be the heads up, but this would be your entry right over here. This becomes what we call a 5-alarm trade. That's a high probability trade to trade that area. Remember where we took this and looked at the 30-minute and we looked at the hour? And each time we went to a larger time frame, it smoothed out some of this little bit of choppiness and retracement. Now let's go to this vertical line here. Go back to the 1 hour. We move the vertical line, or the anchor, over here to this vertical line. Now, we talked about impulsive, corrective, impulsive, corrective, impulsive. This indicator at the bottom helps you to read impulsive. If you know how to read it, it tells you this is a corrective. It tells you this is an impulsive. It tells you this is a corrective. And it tells you this is impulsive. And so you don't have to worry about trading counter trend trading. Just take the trades in the direction the market's going. So I'm going to mark these last two lines over here. Now we're going to go to the 15-minute. Right here. Here again, you could have taken a trade and you had a lot of signals that said maybe you ought to be getting out, break even, don't lose that 10 pips, and the same signals with more confirmation telling you that this is a high probability trade. So that's kind of how you can see and get a feel for how the market's moving, being in tune with the market. We've showed you from our free stuff that you get for free, and we've just shared with you not exactly how to use it exactly, the beginning portion, the foundational portion of the course, and then the complete course, the nth degree course. So that's what we have going for you right there. Now, what we're going to do now is in the next week, we're going to be adding to it, to the nth degree. It'll be an additional part. It's called the nth degree advanced. I'm just going to show you a shot of it. It's more tools to help you determine how to trade the market and be in tune with the market. Okay, you see a few more indicators and shades and numbers and things on the, the chart. Once you know how to read this, this tells you exactly which way you should be trading. There's more confirmation that gives you confidence that this is where you should be trading, and the suggestion that you do not want to be trading this way, and more confidence that this is a good move as well. The market starts to talk to you. It impulse, corrective, impulse. And of course there was an impulse back here that we're not showing. So let's just draw this line. It's not going to help you much back in here because this is history. It'll help you more over in the current move, which was today. So we put a line there and a line there because this indicator will keep on moving along as the new days form. So let's just look at this. Did this tell you to start trading that direction? Yes. Did it tell you to get out of the trade? No, there's not really an exit signal. And so you could say, well, based on what everything's telling me, I think I'm going to stay in. And you could have not exited there. You could have ridden through this retracement and then stayed in the trade there. So if once you know how to read what's taking place, you can then be in tune with the market. You don't get concerned about little drawdowns because you're looking at the bigger picture and seeing how the market is flowing and how it's moving. We went to look at the charts, and now we're going to talk about the nth degree. Now we've shown you what it looks like. Let's tell you what it can do for you. And we saw some of these things. We didn't name them, but now we're going to name them so you can see what we're talking about. We talked about how to recognize a trend. We talked about how to tell when a trend is changing or the direction is changing. Remember those corrective moves? We talked about how to identify high probability trades using time frames. We talked about how and when to exit trades. Just a couple of simple exit strategies. There are more exit strategies than we showed you there, but that is one thing that you will learn in the nth degree. And how to trade with different time frames, how to trade more than one currency pair, how to tell when the market's going to have high probability trades, how to trade while working a full-time job. And there's a little technique that really makes it simple, straightforward for you to be able to do that. In the nth degree advance, there's one little section that tells you what to do when you sit down to the computer, how to determine what the bias of the trade is, which way that is the market going, which is the most likely way to be profitable trading. You can do that very quickly. You don't have to analyze a lot of things. You just look at a couple of key setups and structures, and you can tell how to find out what the bias of that move is. So you can do this when you're working a full-time job, then trade it on larger time frames. How to recognize chart patterns. And you saw patterns, impulsive, corrective. Remember that? We talked about chart patterns. How to control your emotions. We talked about the one spot where, well, I've got all the tools, so I'm not necessarily going to exit at this point. I think I might stay in. How to be focused and be consistent. Well, if you have tools that are consistent and reliable, then you can be consistent and just focus on what the market's telling you at that time. Also, we talked about how to stop your losing trades from running too long. If you take a trade going the wrong direction, well, get out and learn how to allow your winning trades to continue to run to completion, run to your target points, or run to where the market says, hey, I'm changing directions now. You need to keep proper journals and records. And so you'll know where you're at, where you're going, where you've been, and if you're doing better. Now, this is going to tell you, am I getting 3 months of experience over and over again? Am I getting the first years of experience over and over again? Or am I progressing? Am I getting 1 year experience in 1 year? And am I getting 2 experience in 2 years? Or am I getting 1 year experience in 30 days? This is what will help you with this little journal keeping system. And so this is how to get that one experience, year experience in 30 days. Now, here's the interesting concept. Now, how to get 2 years of experience in 45 days. I'm going to show you some additional things that you can do to get more experience. So, do simulated trading. We didn't do simulated trading exactly. That's what you'll see in the Jumpstart. but we shared with you the concept using a larger time frame, finding the direction, and then waiting for the market to come to you on a smaller time frame. But do it in a short period of time. In 15, 20 minutes, you might be able to take 5 or 10 trades, and you get used to seeing what happens in those trades, what the market's doing. So do simulated trading. That will help you to get the more experience in a shorter period of time. Attend as many trading rooms as you can fit into your schedule. We have 2 trading rooms, the U.S. session and the European session, and attend as many of those as you can and get exposure to other people. Join our inner circle. There were trades being taken in the inner circle from the heads up another trader gave. He said, I'm looking for a trade on this currency pair, and he was looking at the daytime frame. Another trader was looking at the 4-hour time frame. Another trader was looking at the 1-hour time frame. All of their way of trading said, hey, let's enter that trade. They all reported about 30 pips. That's what the market was going to give them. They put on their trade. Some of them were awake in different parts of the world. Others were getting ready to go to bed. They went to bed, but at the end of that time period, there were 30 pips. This was brought to the attention by several traders trading together in the inner circle. Ask questions. You can ask questions in the inner circle, and someone will generally respond. You say, I'm seeing this on the pound dollar. What is your take on it? And they will give you their suggestions and opinions. And you might say, okay, I agree with that. Or, I'm not quite seeing that. I don't totally agree with that. But at least you have another view as to what someone's talking about. Make your decisions on your own understanding. But ask the questions and collaborate with others. Share with others. If you see something, say, I'm seeing this setup on the euro yen, and when it reaches this point, does this, then I'm looking to get in, and here's my profit target. Now, everyone knows that that is a suggestion. This is on my watch list. If you say this is my watch list, sometimes watch lists don't pan out. Then don't take the trade. Just wait until the market tells you to take the trade. But you have to have some kind of a direction and an idea as to what you want to do with the currency pair if some signals start showing up. What else is there? We've talked about all these things that Nth Degree has, but it also includes 21 trading labs. Now, these are answers to 21 questions most commonly asked by traders. So we answer these for you. So we talked about asking questions. Well, we've tried to answer questions before you even ask them if you run through these little webinar sessions. Accelerated coaching webinars. Now, there's a way of learning how to trade more quickly. And so we talk about how to use the fast method of learning how to trade. You're not being reckless. You're not being negligent on learning, but you're learning the things you need to know to be able to trade quickly and get up to speed quickly so that you have more confidence in your trading. We have trading rooms, the U.S. and the European trading room. You have access to those. And we have a 14 Psychology of Trading course. That's over 7 hours of material there as you go through that. And you can hit and miss on this one and pick the things that you may be interested in that might be of help to you. Now, what does this all cost? It costs $497. That's a great value to be able to continually have access. It's almost like mini coaching. So you can get up to speed and get as far as you can by your efforts and talking to other people. This is a fantastic opportunity. So here's the link. So type in this link in a browser, and then it'll pop up and you can order from that link. Now, maybe this is the first time you've seen us. Maybe this is the second time. Maybe you've been to our training rooms. Start trying to make a decision. Is this something that really would work for me or not? The thing that I suggest to people is, what if you don't have all your questions answered right now? You have some other questions. Well, contact Michael at forexstrategysecrets.com. Send him an email. In the email, if you have one, send a Skype address so that he can possibly reach you that way, or send a phone number. And here's his phone number if you wish to call him. the 801-805-0159. That's a direct line. Now, if you get a busy signal there, leave a message, leave your email address, leave your Skype address there as well. And of course, he'll have the phone number. But get in touch with him and ask questions and see if this is something that will fit. He'll answer your questions. It's not a high pressure type situation. So when you log in to the website, you click on, you'll be showing the main home page. And you may not have a list of all these products because these are products that you would have to purchase. But this Jumpstart strategy will appear there. You just click on that, and it'll take you to an area where you'll see some additional free material right in here. And then click on Jumpstart video course. This is where the Jumpstart course is. We show you the installation of the Jumpstart indicators, so you know how to set it up. We talk about simulated trading, how to get that start getting that large amount of experience in a short period of time, trading small and large time frames, and then some more examples of simulated trading using 3 time frames instead of 2 time frames. Either one works. Try that out. Use that. See if this is something that's going to benefit you in your trading. Now, we talked about simulated trading. If you take, say you have some other indicators that you want to see if this works on, you can use simulated trading on other indicators as well. It'll help you to learn whether they're going to work for you or not more quickly. And you can decide faster whether something's going to work for you or not. Now, down here a little bit further, basics of consistent winning patterns. Now, this is the little section that Michael put together. He talks about entries, exits, market cycles. The market might go as just like you're going in a trend, and it might take a day, depending on the time frame, or it might take a week or so, maybe a month is a cycle. You need to learn how to be able to trade through the whole cycle, and when the market retraces, either get out or stay in, and knowing that you're going to trade through that cycle. And then what you need to do as a trader. Now, there's some assignments in here. Everyone that's followed through and done those assignments reported back to us has been amazed at the amount of profit that they were making, which they were unable to make before, just following the simulated trading examples and starting off with something very simple and straightforward, then expanding. You saw how the whole course expanded. It wasn't taking you one place to another place. We were just adding upon what you already had learned in previous information. So here's the link once again if you didn't have a chance to write it down. We're looking at the Nth Degree course. This is all you will ever need to be a full-time trader, but there's some advanced things coming out to make you even a better full-time trader, things that make it easier for you to read the market, be in tune with the market, tell what the market's doing. You can read the market more quickly by having just a couple of indicators. You can say, oh, that's the direction. Then you start looking for all the things you already know. But you know which direction your bias is, which way you're wanting to trade. And once you get used to trading, you'll hone in on several different time frames or a time frame or two that you like. Once you get good, this is what one of our good traders has said. They're typically a long-term trader using the day, the week, down to maybe the 4 hour to trade. But in using that larger time frame, sometimes a trade doesn't develop for several days. And so they're just sitting there waiting. And so with having additional tools, knowing how to read smaller time frames, they can take trades on an intraday basis and capture a few more pips, waiting for the big trades to set up. And many times use these entries on the smaller time frames to fine-tune their entries based on the larger time frames, where then they can turn and manage the trade on the larger time frame. So it may have started out as a trade for 30 or 50 pips, but as it progressed, it finally hit the point that they were looking at on the larger time frame. And so they just switched to the larger time frame to continue to manage that trade. And then they can add on to that trade, meaning take an additional position in that same direction and capture even more pips by learning how to be patient, trade long-term, but be aware of short-term entry signals. We started marketing the course material in 2007. So that's about 8.5 years now that we've been going. We've improved, we haven't changed, we've stayed with the same trading system, not changing a different trading method, but adding to the existing trading material that we had. So you saw we call it the launch pad. That was the first thing that came out. And we were then in the process of building the nth degree. It came out shortly thereafter, so then we had our complete trading system. From there, we've added additional strategies, techniques, and we found that there are some other tools that enhance and fit in with the way we're trading. For example, one trader that came to us, he was used to using most of the tools that we find in the nth degree advanced section. And his trading became better because he incorporated the tools you've seen in the nth degree, the momentum indicators to tell him how to time his entries. He became a more consistent trader, knowing when to get into the trades. He knew where to get out of the trades better than he knew when to get into the trades. We talked about community support. We have Inner Circle. We have the trading rooms. We have people from around the world talking with one another. One of the traders said that the reason that she liked what she saw was because it was simple, straightforward, and she could get her questions answered. There are not many courses that I'm aware of that you can just buy a course, watch the material that they provide for either written or video, and be able to go ask them a question anytime that you may not totally understand something. That was always a frustration for me, not being able to get my questions answered. We'll get your questions answered once you have the course material, either in a trading room or through an email, but communicate with us. And that's the way we can help you. Talk to other traders. The best thing to do is ask the question in a trading room if you can attend. Then we can illustrate it for you live and share with you why we're thinking, what we're seeing, and help you to, you can even bring up a trade. I took this trade, and what did I do right? What did I do wrong? It might have been successful, but you just lucked out. Or it might have been moderately, you broke even, but you did everything right. You protected yourself from that big loss. So asking questions is an important thing. So there's a lot of places to talk to people, get your questions answered, have a team to trade with, and some camaraderie. You're not out there all by yourself.
I'd like to congratulate several new students here on their acquisition of this product during this webinar. I think you'll be very, very happy with this choice, and we look forward to working with you in the future. I think this will be a turning point in your careers, and just wanted to thank those who have participated today.